John, thank you very much for joining us on Trade Financial TV.
Pleasure.
So let's start with elevator pitch. Who are you, what do you do, and where are you from?
Sure. So ATI, the African Trade Insurance Agency, is Africa's multilateral guarantee agency. So we guarantee trade and investments across the African continent.
So what is causing the increasing flow of transactions, particularly in the longer tenor market?
Yeah, I mean, let's face it, there's a huge demand and interest for investment financing in Africa. Apart from anything else, Africa has high growth rates, and as we know, growth rates are fairly low elsewhere in the world. So there's huge opportunity. I think what you have to match with the opportunity is obviously the risk and the perceived risk, and that's where an institution like ATI comes in. We are a de-risking institution, and obviously as a development finance institution as well, one of our mandates is to lower the perception of risk, lower the cost of risk in our member states. And we can do that as well through extending duration. And that, again, to your question, we do play a role in extending the risk profile for transactions in Africa.
So what are some of the key products that exporters perhaps can benefit out of a DFI like ATI?
Sure. I mean, I guess we're talking international exporters looking to export into Africa, but actually we can also work with domestic exporters in our member states. We can work as an ECA. We don't have the same national content requirements. We're more agnostic about that. At the end of the day, as an African multilateral, we look to see whether a transaction benefits an African country, and if it does, then we can de-risk it. So we can insure exporters against the risk of counterparty non-payment or country risks, for example.
Yeah. So I guess on that native country risk, corruption, for example, is a considerable issue at the moment in many of the states. What can governments do to help mitigate and reduce this?
I mean, it's no secret that corruption is one of the bigger challenges in a number of African countries, but not just Africa, let's face it, emerging markets generally. I think there is, having said that, an increased focus by a number of countries in the Sub Saharan region in particular to improve or to tackle corruption. Clearly, this is not something that's going to happen overnight, but more transparency, I think, is very important. Greater focus on the rule of law, making sure that prosecutions actually happen and go ahead. And of course, I think what you'll see as countries get an emerging middle class, countries move to the middle income status, very often that's associated with a push from that middle class as people demand better governance. So I think a number of these ingredients are present in countries across the continent, and we're seeing signs that things are moving in the right direction.
Okay. So there's currently a big capacity versus demand mismatch. What can a DFI like this do to, I guess, mitigate that?
I mean, you're right, it's no secret. I think the demand for de-risking in Africa exceeds the supply or the ability of de-risking institutions to cope with that demand. ATI is one of a number of multilaterals that work on the continent. And we can work together. Indeed, it's something we're doing there's a co-guarantee platform that ATI has signed up with other de-risking institutions in Africa to provide greater capacity. We're talking about FREX in the African Development Bank and so on. The other key partner for us, of course, apart from export credit agencies, is private insurers. And we work an awful lot with the private investment insurers to augment capacity across African markets. But ultimately, this is a long game, and we're all working within finite risk limits. So we don't have magic solutions for this. I think over time, you'll build more capacity as people have better experience. And that's, again, it's part of our role to show that the actual fundamentals of risk perhaps aren't as bad as the headlines might suggest.
Yeah, great. And I guess how are you educating people about where some of these risks don't lie and where the opportunities are?
Well, we do a lot of work bringing partners actually to the ground into Africa. I think, from afar, people tend to read the headlines, and often, let's face it, all over the world, the news is dominated by the negative stories and not so much the progressive, positive stories. So part of our role is to get people onto the continent and actually to see that that things aren't perhaps as tricky as they might assume, and also actually just to broaden the appetite of investors who otherwise just couldn't perhaps look at African risk. For example, ATI has been doing an awful lot of work with institutional investors who, by mandate, historically haven't been able to consider Sub Saharan Africa, and we've had a lot of success with that.
Yeah, great. So I guess moving forward for the rest of the year, where do you think the biggest opportunities lie within ATI?
Well, so ATI as an institution now has 17 member countries as of today. We're growing our membership very rapidly at the moment and becoming a truly Pan-African institution. We're very, very busy in the kind of active, larger sub-Saharan markets. So Nigeria, Ghana, Cote d'Ivoire in West Africa, Ethiopia, Kenya, Uganda in East Africa. In the south, Zambia has a lot of opportunity. Again, DRC, particularly with the new political environment there, we're seeing huge activity there. And again, moving to North Africa, Egypt's recently signed up to join ATI, so we expect to do a lot of business there.
John, it's been a pleasure having you on Trade Finance Talks TV. Thank you for coming on the show.
Pleasure to be here. Thanks.
Great.